Well, let's kickstart the show then by putting the spotlight on Multiple's alternate asset management. We do know that Multiple's private equity is known for its investments in companies like Delivery, Licious, as well as Dream11 and many more. Recently, they made an investment of 1,200 crore rupees into Veritas Finance. Let's understand a little bit more about the fund's strategy as well as what the outlook is when it comes to the India story in light of the fact that the deal momentum is slowing down. Nithya Easwaran is the Managing Director, Multiple's alternate asset management, and now joins us on the show. Thank you so much for taking time out. Nithya, to begin with, let's talk about the investment in Veritas Finance, 1,200 crore rupees. Tell us a little bit more about what exactly appealed when it comes to the company.
Yes, Avanne. Veritas is a company which I have personally been tracking for more than 4 years now. It's in a space we like a lot. It is covering the micro SMEs in the country, and that's a very large white space for India, really underserved from a financial inclusion perspective. So there is a lot, really big business to be built in this space. But it's a space which requires very good understanding of the ground realities and very deep knowledge of local markets that the company operates in and very strong processes. And Veritas fits all of these. And this is a company, like I said, I've been tracking for a while, and they've really done very good business, pristine quality of the portfolio that they have built. And that's how we are here. So very delighted to be joining their journey of building a very large institution.
Right now, Multiples has built a deep specialization in chosen sectors, the likes of financial services, pharma, healthcare, consumer and enterprise technology. Are there any other sectors that looks promising, and how are you looking at these sectors really growing with the India story?
Yeah. Happy to talk about that. We believe that investing in India is a combination of very strong top-down thesis and then a combination of ground-up analysis of companies that we invest in. So from the themes, all of these four sectors now, we've been in Multiples at it for more than 13 years. So there's a very deep mapping of the sectors, coverage of good companies, knowledge of specific sub-themes that we want to pick up in each vintage for each of these. And for us, financial services, pharma, healthcare, consumer and technology, all of these, as India is heading towards its 5 trillion journey over the next several years, these are sectors that will do well. Now, if you look at these, two of them, financial services and consumer, play to the large Indian market. Which is, we all know the story of middle India really, bulging out and the consumption going up. So this is the middle India, which will consume both consumer products as well as financial services. The other two sectors, which is pharma and healthcare and IT services and enterprise tech, is India to the rest of the world. These are strengths of India, both in terms of engineering capabilities, technology skills, or pharma industry skills that we have, and the ability to put up good quality manufacturing facilities and supply to the rest of the world and to India as well. So it's creating a very nice balance, playing to the strengths of India in markets or in capabilities. Now, going forward, what we are also spending a lot of time on is the whole what we call green economy or sustainability-led investments that are happening in India. You would have noted our recent investment in electric vehicles, which we did with the Tube Investments Group. We had made a 1,200 crore investment in their electric vehicle company. So that came out of that initiative of covering this green economy sector. So we are spending a lot of time on mobility, on waste management, the circular economy, and you should see some things happening from the Multiples end in these sectors going forward.
As a strategy, Multiples private equity looks at platforms for multi-decadal growth potential as one of the strategies. Can you walk us through all the strategies that you look at before investing?
Yeah. So we, in Multiples, we always try to identify the category champions in each of these sectors. So that is our underlying theme. So we want to invest in the good to great journey. And we want to be, if you look at our portfolio from the past as well, whether it's Cholamandalam Finance, Delivery, Dream 11, Vastu in our affordable housing finance space. So all of these are category champions in their respective categories. We also like businesses that adopt technology, whether they need not be tech companies, even incumbent companies that adopt a lot of strong technology. Within our investments, we look at when we put out the themes, we look for themes, two types of themes. One is transformational growth, where you have a good company and it is undergoing a transformation in their scale up or adding new products and services and building itself out. That is one theme that we catch. The other are, these are upcoming, emerging, large themes where we are quick to identify early winners. That's where our Delivery, Dream 11, Licious, Acco, all of these would fall in that category. And companies like our investment in Ncube, our investment in Zenex, which we did in the animal health business, all of these would fall in the transformative growth category. The third is what we call as platforms. These are build outs. So our investment in APAC, which is building out a micro SME business, our investment in Vastu, our investment. So all of these would be in the platforms category where we're doing complete build out. So these are the three themes, the four sectors and the three themes that we look for in multiples.
Tech was really the star sector in 2021. We're holding a lot of promise. After that, what has been your observation in terms of which sectors have held out and what would be some of the other promising or emerging sectors for this year?
So we are going to, the multiples philosophy is to stick to the core. We are going after all these four sectors and the fifth one, which I spoke about, which is the green economy. And we are seeing opportunities across all of these. So while, in 2021, we had a lot of investments going into technology. If you see, our investments in technology have been since 2014, actually, and we've had a consistent method of identifying investments and being in them and identifying these winners. So I would say all these four sectors, the secular story of India continues to be strong. So I don't see any sector overweighting or underweighting itself. We do know that in the consumer tech, there's a bit of a thanks to the overvaluations that happened, companies are still growing into their valuations. So we do see lesser of those in our pipeline currently, but consumer is something we are very focused on. So some interesting propositions that we are examining there. Financial services continues to be strong. In tech services, IT services and SaaS, both we are seeing good investment opportunities. So I can't see anything overweighting itself. All of these will continue to play, and we are very excited by our newer green economy focus as well.
Let's also talk about the new fund. In total, how much money do you plan to raise in the fund and when do you plan to deploy it?
So we announced a $650 million first close last month into this fund. The fund target raise is a minimum of 800 million and a hard cap of $1 billion. So we would be heading there, and we're seeing strong momentum in that fundraise. So hopefully by the end of this year, we should be heading close to our finish line on the raise. But we can start deploying the fund. We are the Veritas investment that we did is from our Fund 3. So it should be, and we would have probably one more investment from our Fund 3 and then start deploying out Fund 4. So later this year, we'll start looking at investments into Fund 4.
Do you think that exits are becoming a lot more difficult now than they were earlier?
I wouldn't think so. I think things are, so the good news about, capital markets can be pretty volatile. We would have had a discussion a few weeks back. It was looking a little duller, and suddenly you can see the markets kind of zooming. But leaving that aside, Again, from a overall secular investment outlook, I think things are fair at this time, and we would love to continue to invest. What has happened is a lot more focus on business models, focus on improving margins, focus on improving profitability. So the language at the company's end is also extremely encouraging for investors to come in at this stage. And the growth agenda is back. So a lot of sectors were recovering from COVID, and they had a long recovery as well from COVID, but that is behind us now with this 2023 going in. So things are settling down. We've also seen companies which had a big tailwind due to COVID adjusting back to more a new normal, especially the digital companies. So with all of that falling in place, I do feel that it's a good time to make investments across sectors. We also believe that the capital markets in India, a lot of people do expect to see a lot more activity next year in it. So even from an exit perspective, things should look up. But the private markets is still offering exit in this. We are seeing a lot of deals which have a good dose of secondaries as well in them. So I would say that the India story continues to be very good for making investments now.
Right, that's true. And Nithya, Multiples was targeting to raise close to $10 billion by 2030 and deploy close to $8 billion in various companies. Are you on track to achieve this target?
Very much. You've put out our long-term vision and plan. Thanks for that. So we are definitely building towards that, and we feel very confident of kind of getting there. This $1 billion raise that we are targeting in this fund is a very big step in that direction. But even more importantly, Avanne, our investments have exceeded our fund sizes. I'll just give you an example. In Fund 3, our fund size itself was $650 million, but we have put out more than $1 billion. So we've been able to generate larger deals, offer co-invest to our LPs, and thereby address a larger investment opportunity in the market. So with our $1 billion fund, which should be the next fund, we would be targeting close to $1.5 billion worth of investments that we will manage on the back of $1 billion fund. So very much the 10 billion remains squarely in our minds, and as we build this out.
Well, good to know, but I wanted to also get in your overall view, Nithya, as to what the outlook is at a time when we're looking at a pretty tough environment. There's a funding shortfall. We've seen layoffs across the board. There's inflated valuations. What's your take on the current environment in India?
There was, if you've seen, let's look at a few parameters, right? Inflation was a bit of a worry a few quarters back, and we have seen that kind of settle down in some way. So we are thereby, and that is a big determinant of our consumer sectors, little bit of funding availability to the financial services sectors. We are definitely seeing that coming off. Credit growth has picked up in the banking sector. These are all quite positive signs. FI money is flowing back. As far as just from a sentiment perspective, that's a good thing. We are seeing a lot more, people, we're seeing a lot of block trades happening. So liquidity is coming back into the system. So I see these near-term signs as positive. What has happened is on the overvaluations, which kind of in the exuberant times in 2021, is taking some time to settle down. Specifically, I would put it in the consumer tech and some of the fintech sectors. We've also seen some of the announcements from regulators on fintech, and that has kind of pushed people to reject their business models. So there's a little bit of turmoil in the companies which were a little bit of on the fringes, of the regulations, and is forcing them to come mainstream. But I see all of these as good things, because what has all the funding winter done in the boardrooms today? there's a lot of focus on preserving capital, lot more respect for capital today. People are talking about, bringing down burns. It's okay if we grow at 25%. It's not necessary to grow at 50%, 60% and keep pushing up the burns. So all of those are good things. Having said that, we do hear, the news on, whatever we hear on Byju's or Farm Easy and all of that does keep the sentiment in check. But I would say, barring some larger examples and some of the things to settle down where overvaluations are, and some of the companies will take a long time to come back to markets and readjust valuations and raise money. But that is not all India. That's a part of India. I think the India investment opportunity is far larger than that.
And finally, there's also been that focus on, environment conscious sector. Can you tell us a little bit more as to why this is an emerging sector for the future?
Yeah. So we put it into the whole green economy. So there, what is encouraging is two things. One is the regulations in India, and this is coming from both the central as well as the state governments, which are tackling the, and pollution as well as climate change. So that is driving a lot of adoption of, let's say, electric mobility, and we see the effects of that flowing into the both the OEMs as well as the related sectors. The other big push is in the EPR guidelines, and that's driving some amount of recycling and circular economy businesses and waste management. In addition to the regulations, globally, we see companies adopting targets which go even beyond regulations. And that's because people are taking their ESG responsibility very seriously. And that's also driving, a lot of investment opportunities. So that's why our interest in both of these, the circular economy businesses, as well as where we're looking closely at, recycling, plastic recycling, waste management, and also the electric vehicle related business. And I'm sure there'll be a lot more as we get into, and some of these businesses will come through the venture ecosystem and will have to grow up and come, but some require, these are actually manufacturing businesses, but manufacturing businesses with a focus on climate change and circularity. So it's a very interesting time because historically, we have not looked as much at manufacturing businesses. Now with this momentum, which is on, and with a lot more adoption of technology also into these businesses, it's really interesting us.
Okay, good to have you. Thanks so much, Nithya, for joining in. So that's the take from Multiples, looking at investing in India from a top-down thesis and a ground-up analysis, and talking about businesses that adopt strong tech, transformational growth, and emerging themes with early winners. All right, indeed, some